English for the Financial Sector by Ian Mackenzie. Copyright Cambridge University Press, 2008. Unit 1. 1.1. Listening 1. Types of banks.
Well, 25 years ago, the financial industry in most countries had two key characteristics. One was that pretty well all the banks and financial institutions in that country were owned in that country, and there were few international links. In many cases, none. So they were national banks belonging to that country. The other key feature was that financial institutions were specialised. So in Britain we had institutions that lent to people who wanted to borrow to buy houses. That means arranging mortgages. So we had specialised things called building societies doing that. We had retail banks, where individuals and companies kept bank deposits, and which made loans to cover short-term outlays, and, in some cases, longer-term investment. Then we had another range of institutions, like insurance companies, to provide life insurance or pensions, and we had investment banks, sometimes called merchant banks. These weren't retail banks. They didn't deal with individuals. They dealt with big companies. They gave the companies financial advice, maybe arranging mergers or fighting off a takeover bid, and helped to raise capital, for example by issuing shares or bonds.
1.2. Listening 2. Going international.
In the old days in Britain, the merchant or investment banks were pretty well all British, and there were big boundaries between building societies and insurance companies and all these other types of companies. Well, now if you look at the picture, many banks have become universal banks. Perhaps banks is the wrong word. Lots of institutions do all the things that I've just described. Insurance, mortgages, advice, raising capital for companies, and retail banking besides. And the other great change is that so many of the financial institutions, and it's not just true of Britain, true of pretty much everywhere else, are now international. So, for example, in Britain, 2 of the big 4 retail banks have changed ownership. One was taken over by Hong Kong and Shanghai Bank. That was the Midland Bank previously. And it's now changed its name to Hong Kong and Shanghai Bank. And it really isn't a British bank anymore. And another, National Westminster, was taken over by the Royal Bank of Scotland. But if you look at, say, countries like the Czech Republic or Hungary or Poland or New Zealand too, and plenty of other small countries around the world, all their financial institutions pretty well are now owned by foreigners, by German companies or French companies or Austrian companies, whatever it might be. And the huge international financial institutions are typically, though not all of them, American. And you can now think of the City of London, the world's leading centre for foreign exchange dealings and a great deal of finance, as rather like Wimbledon. In other words, it's a great big international stage. Happens to be in London, but most of the players are foreign. They're nearly all foreign companies that do, for example, the investment banking and so many other things. So, internationalisation, and if you like, homogenisation of these hitherto specialised financial institutions. Those are the 2 big recent trends.
Unit 2. 2.1. Listening 1. Arranging meetings. Call 1. I'm not sure that's possible. You know, Kim, I think we should have a meeting about this.
Sure. Are you free on Thursday?
Let me just check my diary. Sorry, I'm busy on Thursday. Is Friday okay?
Yes. How about 9 o'clock?
Yes, 9 o'clock is fine. Your office or mine?
Oh, I'll come to your office if you like.
OK. See you on Friday at 9 in my office.
OK, see you then.
Call 2. Hello, Pat again. Something's come up. I have to go to head office on Friday. Can we make it next Monday instead?
No, sorry, I can't manage Monday. Clients all day. Can you do Tuesday?
Sorry, Tuesday's not convenient. I'm busy non-stop. How about Wednesday?
OK, let's say 11 o'clock. Would that suit you?
Yes, that's fine. Wednesday at 11. I'll come over to you. Sorry to mess you around like this.
No problem. I'll confirm that by email.
It's okay. I don't need an email. I'll be there. Bye. 2.2. Listening to. Handling information.
Hello, this is Mr. Kowadzychek. I have a current account and a mortgage with you, and I'm calling for some information about loans.
Yes, Mr. Yes, sir. What would you like to know?
I'd like to borrow £25,000 to buy a boat, and I'd like to know what interest rate you'd charge.
Well, our personal loans currently have a typical annual rate of 6.4%.
6.4, yes. But could you tell me about secured loans? I read something somewhere about them being cheaper.
Yes, of course. That's right. If the loan is secured against a home, a life assurance policy or another suitable asset, the typical annual rate is only 5%. What type of security do you have in mind? Your home?
Yes, I've nearly paid off my mortgage.
That would probably be acceptable. And the loan can be for any term up to 20 years. When and how are you thinking of paying back?
Well, I'm not sure. I would probably want to repay capital and interest together each month. But it depends. Maybe I prefer to pay the interest only and to repay the capital after 5 or 6 years.
OK. Perhaps it would be better if I sent you an application form for a secured loan. Could you give me your name again?
Kowadzychek. That's Koldzyczyk. It's Polish.
Yes, thank you. And your first name?
Stephen. Well, actually it's Stepan. S-Z-C-Z-E-P-A-N. But these days I spell it S-T-E-P-H-E-N. You have my address. I'm sure I'm the only Stephen Kowadzychek at your branch. But can I leave you a new mobile number? It's 078 919 3372.
Unit 3. 3. Listening. Retail banking.
Well, I'm not sure that retail banking is declining. I think in many countries the size of bank deposits, that's the liabilities that the retail banks have, has been growing faster than national income. It's been rising. People are increasingly moving away from currency towards things like bank deposits. That's a slow, gradual trend. And it's a trend evident in most places, especially the more developing, poorer countries, emerging economies and so on. So I think retail banking has always been regarded as important, but perhaps a little boring for some people. So the real action seems to be more in the big-scale operations with large companies, in huge deals and other kinds of activity, which are thought to be more sophisticated and perhaps more rewarding than retail banking. More sophisticated, yes, more specialised, yes, but not more lucrative, and often more dangerous. Retail banking, I think, is not in decline. Although people have been predicting that it might be at some point, there's no evidence that it is.
Unit 5. 5.1. Listening 1. Lending decisions.
How do banks decide who to lend to?
Normally, we analyze the customers. That means that we analyze the annual reports, the figures during the year. We have to analyze how the company will develop in the future. So, we evaluate the current situation of the customer and the future situation of the customer. We also discuss the loan with the customers. What kind of loan is it? Is it a short-term loan or is it a long-term loan? It's very important to know the maturity of this loan. If we lend money for a long time, we have to be sure that the customer can repay this loan. Normally, the company must be able to repay the loan from the operating cash flow, the EBIT of the company. Our decision also depends on the bank's portfolio. We finance different sectors in industry, and we've got different limits for the sectors. And if we overstep this limit with the new customer, we need a new approval for the higher limit for the sector, and we have to decide if it's okay to increase the credit limit for the sector. We also have a rating for each sector, and we have to decide if it is a sector with a good rating or a sector with a bad rating. If you have a sector with a bad rating, we normally only finance the best companies in this sector. Sometimes the customer would like to finance some different transactions in foreign countries. If we finance transactions in Eastern Europe or in Asia, we have to look at the country rating, and we have to look at the limit for this country. For these countries, we have limits or we have no limits. If we don't have a limit for this country, we can't finance it. It's too dangerous.
5.2. Listening 2. Margins.
The last important point is that we would like to earn money with the customer. We need an agreement about the margin. We have a special system, a special calculation system, in which we calculate the margin, and the margin is added to the cost of funds, and the cost of funds plus the margin is then the interest rate of the customers. We need an acceptable margin. The cost of funds will depend on the market situation and the bank's rating. If you have a good rating, you can get money on the capital markets more cheaply than a bank with a bad rating. Every bank is rated by the international agencies, Standard & Poor's and Moody's. It's a big disadvantage if you don't have a AAA rating. You have to pay higher interest for the money you borrow. We calculate a margin, and the margin includes the product costs. The product costs depend on the product the customer will use. Then we have the overhead costs. Overhead costs depend on the situation of the bank. A smaller bank has a lot of overhead costs, and a big bank normally has lower overhead costs. The most important point is the risk costs, because the risk costs depend on the customer's rating. If I have a bad customer and the customer has a bad rating, in this case the customer has to pay a higher margin. If we can get securities or collateral, we can reduce our risks, because we can use this collateral if the company goes bust. But there is a lot of competition between the banks, and it's very hard for small banks to get good customers or to get acceptable margins.
Unit 6. 6.1. Listening 1. A letter of complaint.
Hello?
Hi, John. Charlotte here. I've got a very aggressive letter here I've got to answer, and I'd like a second opinion.
Okay.
We have a customer whose card was being used fraudulently until it reached the credit limit, and she was on holiday on a small Hawaiian island and suddenly found her card didn't work and didn't have any other way of getting cash.
And we didn't notice anything until too late?
Well, we did. It's someone ordering things from the internet to be sent to an address in the States. We've now notified the authorities there and blocked the account, but this happened last year, and the transactions weren't fraudulent. At the time, we contacted the customer and she wrote an angry letter saying, "Can't I buy presents for friends in America without getting stupid letters from my credit card company?" or something like that. This time, we noticed the transactions but didn't immediately do anything. So suddenly, she was on the other side of the world with no money, and she couldn't pay the hotel, and she couldn't get to the airport, and she missed her flight, and so on, and she says it's all our fault.
And she didn't have any other cards?
Apparently not, and it took 2 days for her bank to transfer money to her. It was the weekend. There's a 10-hour time difference. She couldn't call her bank at night, and so on.
Well, that's unfortunate. But we explain the situation and tell her that we would have taken action sooner over suspected fraudulent transactions if she hadn't replied to us like that last year. Besides, if a card is being used fraudulently, we have to block it. So she'd have been in the same situation anyway.
True, but the thing is, the customer in question is the daughter of the chairman of MGS Bank. She makes quite sure she tells us that in her letter.
And he couldn't get money to her for 2 days.
Apparently not to Hawaii.
What about her MGS Bank debit card?
I think she'd reached her limit on that.
Well, that's not our fault, is it? Adapt the standard letter, regretting the inconvenience. Say we're doing everything we can to prevent fraud, etc., but absolutely not admitting liability. Show it to me before you send it, if you like.
OK, thanks.
6.2. Listening 2. An angry phone call.
Is that MGS Bank? My name's Hewson and I work at Greens, the garden centre. The police just came round to my house on my day off and I was nearly arrested, and it's all your fault because you haven't got a night safe. I want to speak to the branch manager now.
I'm sorry, Mr. Hewson. I can't put you through to the manager at the moment. You will have to explain the situation to me.
I just did. There were 2 policemen at my house accusing me.
Mr. Hewson, if you could just try to calm down a little and explain the situation to me. I'm not quite sure I follow you.
I told you, it's your night safe. You can't use it. It's boarded over because they're renovating the building, so I couldn't put the money in it yesterday afternoon.
Yes, Mr. Hewson. We are renovating the building, and work has been going on for 3 weeks now. And we notified all our customers about this a long time ago. Now, perhaps you could explain exactly what the problem is. Did you take some money home instead of depositing it?
Yes, I already told you I couldn't deposit it.
And this morning your manager checked the account and the money wasn't there?
Yes.
And he notified the police?
Yes.
He didn't call you first?
I don't know. My phone wasn't turned on. I told you, it's my day off.
But you have the money?
Yes.
And you've explained this to the police? And your manager?
Yes, but I don't like being woken up by the police accusing me of stealing £1,500 because you don't have a night safe.
Well, it's true that we don't have a night safe at present, but we do have an automated deposit machine in the self-service area of all our branches next to the cash dispensers, where you can deposit both notes and coins 24 hours a day. Are you sure your manager told you to use the night safe?
I don't know. But I still want to speak to the manager. Immediately.